Traders, welcome back to our price action trading lesson. We're going to talk about how to use price action rules to help us understand where the market is heading and where are the high probability setups. So when I'm doing my analysis, I can see that we're going somewhat sideways. There is slight bearish bias because prices right now continue to go lower. Now to the left, I can see significant spike down that has a small break new extreme, but the break is so tiny, there is a chance that the sellers may want to see the technical new extreme, and because prices keep turning lower like this, it makes sense, given the empty room at the top, that this first leg down is about to have some stronger follow through. So let's see what's going to happen. So right now the bias is neutral with slight bearish tilt. Market is correcting and we have interesting setup because this is the lowest low. We have first entry short, pullback, second entry short. And not only that, this was the correction, one leg, so I can reset the count, no break here, first entry long, pullback, second entry long failure. So now we actually have two setups in one, which is a good sign because the more reasons you have in price action, the better. Problem is, we don't have established channel in play. Yes, you can feel it's going to go lower given the bearish bias and the series of lower highs, but because there is no tangible challenge just yet, I have to mark it more aggressive. But because it is a double high probability setup, it can be considered, it will work for a scalp, and market corrected. So we have a new low. I'm going to redraw the correction. We have a close outside. We are breaking to test the new high, and now that we created again a low that is lower than all these previous lows, and we are starting to have some market geometry, I'm looking for some wider channel, something like this, because now it really looks like this leg is about to have follow through. So this is what I'm going to draw. Now, can I get a confirmation? Because one swing, second swing, it will set up the trend line. However, I need a third swing confirmation. So we have uptrend, break, push to new high, which is a great sign the uptrend played out. And now we have new low, first entry short, pullback, second entry short. Great signal bar, managed to close below EMA. The risk is only 1.25. And this right here is a second entry short of 2 key entry points, confirming the trend line. And this is very nice. High probability setup. Market is correcting, and now we have a lower high confirmation setup, but the lower high is not ideal. The signal bar, look at the signal bar, it has a bullish body. The tail is nice, yes, but remember, this is not a strong trending market. We are still somewhat going sideways. It's getting quite stacked. This is really weak signal bar. I can take this signal bar only when the structure is strong trend, but now we're just getting established. It's quite weak, so you can't really take it. But by the way, I want to briefly mention something. If you have different tick chart, I mean the different bars, because tick charts can vary sometimes, or you are playing the secondary chart, when you're going to place the stop loss one tick above the lower high, it's going to put your stop loss at the break-even level of the second entry short. So think about this. If you're selling right here, and this was the highest point in this swing, this is the top, it makes sense to risk one little extra tick to put it one tick above the entire swing, just to make sure you are secured. Your stop loss is one tick above the entire swing. Okay, we've talked about this previously quite often. This is what we do when you are just within one tick distance from this swing right here. The same thing goes when you're buying. For example, when you're buying high-low and you're going to place the stop loss one tick below the signal bar and you're at the break-even level of the second entry long, just move it one tick lower. Risking one more tick is not going to kill you, and you're going to make sure you can use the entire swing structure to protect your trade. Okay, so if you're within the one tick distance, it makes sense to protect the entire swing because this lower high is part of the second entry short. However, the signal bar is weak, so we can't take it. Market is correcting, and now we have interesting setup. This was getting quite tempting because this is one top, double top, triple top. So this right here is triple test. But the problem is, it is an inside bar. We're going quite sideways. EMA is flattening. Once again, in a strong trading market, you can consider, but inside bar, quite stacked. We can't really take it. And the downtrend needs to get new extreme. This is our target the whole time. So market is trending lower. Great price action. Break new extreme. You can see our stop loss is not hit if you keep it one tick above the swing high right there. So this is why you want to move it here. Now market has a break and push to new extreme. So right now I'm going to pause looking to go short. At the same time, if I want to predict reversal, I need reversal pattern. Felt second entry short, Break and extreme alone is not a good sign for me to start buying. I want to see push above EMA and a failed second entry short above the exponential moving average. So let's see what's gonna happen. Okay, market is testing this key level. You can see everything in price action makes sense. This is the low day key level acting as a support, and now it's transforming into resistance. One test, double test, and market keeps working lower. So once I see this, I have to reanalyze the structure, because this push down after breaking extreme, instead of market correcting or reversing, it keeps going lower. After breaking extreme, I would expect at least push above EMA. At minimum, that's not happening. And this breakout pullback, the second entry, is a good sign that the sellers are strong in the market. Second entry short, breakout pullback, but we can't really take it. Horrible signal bar. We just had a break in extreme. You don't know real time that there is wider channel. You can only look for wider channel now that you keep pushing lower. So this was the channel I was looking for, something like this. I have small overshoot. So after overshoot, I have to skip the very first second entry short. So now I'm expecting prices to have stronger correction, because overshoot can generate stronger pullback in the opposite direction. But overshoot didn't behave as overshoot, and we continue to trend lower. Okay, so I have to delete this because the trend is too strong. Okay, it's too bearish. Overshoot is not acting that way. There has to be a bigger pattern. There has to be some different channel. So the trend down is continuing. EMA keeps rejecting, so I like drawing the one big channel like this, the main channel, because it's quite steep. It fits pretty well, and it explains the price action, why we continue to go lower. And I can draw secondary smaller channel, something like this, connecting all of these swings, because you can see we're going quite sideways. This is really where the bottom dropped. It aligns with the EMA, so I can use both of these channels. And actually, that's an extra confluence. You're part of the big channel, so this is giving you confidence to sell, and this downtrend is in play, so it gives you confidence to sell as well. So the trend is bearish, and as price action traders, we're not thinking about buying. And you can see just by playing the price action and following these candles, they can't tell you what's going to happen. You cannot predict the future, but you're following the price action, and this is important. You're not predicting what's going to happen in 5 hours. You're following the institutions, what the market is doing, and they're leaving footprints in front of you so you can take advantage of it. Now, we can still predict if there's going to be a break of the downtrend. You expect new extreme, so you can have the prediction, but it doesn't mean you're going to blindly trade it. You want to follow it and see it's getting confirmed. So now we have a correction. I want to see second entry short below EMA, because the big trend is in play. The downtrend, this one, needs to get new low. But we only have first entry short, unfortunately. So we have a bunch of first entries today. Unfortunately, predictable price action, but not too many two-legged pullbacks, high probability setups. Break a new extreme. Am I worried about this? Not as much. It's always better to have both channels in play, but because the main channel is in play, I still can consider selling. So let's see what's going to happen. New low, only first entry short, so I need to wait for the second entry. Market is correcting, and we have nice resistance. This key level is important for sellers. You corrected to the EMA, new low, first entry short, pullback, second entry short, multiple tests. So this would be a great area to consider short setup, confluence with the EMA and the triple test. But because the signal bar is like this, I can't mark it even aggressive. Double bar entry is simply too big. The scalp was already made. So once again, context is solid, but no way to get in with this signal bar. It worked for a scalp, new low, count reset for a entry short. Now I have overshoot again, and it makes sense to treat as overshoot because we are working lower and lower. It looks overdone, and even our wider channel, the widest one, has overshoot. So market is correcting high, and it's exactly acting as you would expect, exactly as overshoot, because overshoot can generate stronger correction in the opposite direction. And you can see massive push above EMA confirming that the buyers are in play. Now, the overshoot is generating uptrend in play. If there is a break in your high, I can take failed second entry long below EMA. I need to see the push below EMA, okay? Because after overshoot, you don't know how strong the pullback is going to be. Overshoot can even reverse the market. So I want to see push below EMA number one and a failed second entry long below EMA, because I expect new low for this downtrend. But because this is such a clean one leg working higher, clean uptrend, there can be a new high tested. So I need to see some stronger push below EMA. Okay, you have a failed second entry long here, but this is an inside bar. So not only you pushed above EMA, not only this is an inside bar, but we have uptrend that needs new high. You can't take inside bar felt second entry long just yet. Okay, but let's say there would be some perfect felt second entry long, absolutely textbook signal bar. I still would need some lower high confirmation or push lower and a second entry short at the EMA, simply because overshoot is generating stronger bullish push and this uptrend is so clean. Okay, so overshoot is important and the clean uptrend needs to get new high. We have a break, push to a new extreme, and uptrend played out with the break and the new high. So now I'm going to pause, looking to go long. Can we push lower? No. Actually, I have short-term downtrend, but we already have a break in new extreme. And you can see EMA is flattening and it's starting to form some consolidation. So if I'm going to draw consolidation like this, the key level is there. Can I go long? I cannot. Remember, we traded down the entire day. So I'm thinking mainly about selling. I expect the new low to be tested. But because we had overshoot, there can be stronger bullish pressure. It can take a while due to overshoot. So I need to have some clean break out of this trend range. So I definitely cannot go long because it's against the main downtrend that needs to get new extreme. At the same time, in order for me to sell, remember, you need to be patient. You are part of consolidation. We are part of consolidation, and this downtrend has a break in new extreme. It looks like 2 legs down. So if I'm watching this, and if I'm predicting, let's say, some wider channel, something like this, I want to see prices getting away from this key level and confirming the wider downtrend. The fact that we're going to get the new low. You're going to see this exact scenario happen in a few minutes. It didn't happen. It negated. We pushed back above EMA. Okay, I got to be careful. Now we're definitely part of this consolidation. So let's see what's going to happen. Prices are pushing long. We're going to redraw the downtrend. New low first entry short, second entry short. Of course, I cannot take second entry short inside bar, and the uptrend is in play. Clean uptrend, clean one leg. It is an inside bar again, so I gotta be careful. Market is pushing back above EMA. We have high-low confirmation set up, but this is an inside bar. This is an inside bar. You can't really take it, so you know. But now it's obvious we're gonna go back into this trend range, but you can't take it. It's an inside bar. You know, I was my break here. Looking back, this could have been quite a tricky setup if you have better bar, not an inside bar. So hopefully no one got trapped here. But you can also see the clean visual push working hard. There is no broad break new high, so the short uptrend is still in play. So no real way to take it, but it can be confusing breakout pullback. So if you have some textbook chart, textbook signal bar, and you took a breakout pullback here, not that big of a deal. Overshoot can generate stronger pullback in the opposite direction. Most breakouts out of trend ranges will fail, so we can expect stronger bearish pressure, exactly as it is happening. So now because we're going back into trend range, I'm not expecting new high because overshoot and a failed breakout is generating stronger bearish push with the direction of the main trend. So I want to see second entry short at the EMA, because if we're going to get a break of this downtrend, we're going to need new extreme. That didn't happen. Unfortunately, new low first entry short only. So first entry short only, once again, no good opportunity. And we have new low. So I cannot go long now because, of course, we traded down the entire day. The big downtrend should get new extreme. This is clean spike. And this is exactly what we want to see. Look what happened. The key level completely negated. We can't even break the EMA. The entire push down looks seamless, and you're getting so far from the initial trend range. This is a sign that the sellers are now about to test the new extreme. So just like here we talked about this, you want to free yourself out of the consolidation. You want to have some nice wider channel. Now we have spike and a channel pattern. So this is how it looks like when we're about to test the new extreme. And this is the lowest low, so we need to test the new low. So I'm thinking about second entry short at the EMA or some hyperbolic setup. It's not acting as overshoot, so I can widen a little bit, but we already have a break in new extreme or the main one. So market is correcting, but this is quite a seamless push down. Okay, I can see that the spike and the channel is still in play. It aligns with the EMA. You can see this is perfect. One clean spike, such a tight leg, and the secondary leg is much wider. So spike and channel pattern is in play. After breaking new extreme of the main channel, market is not reversing and continues to go lower. So This channel is gaining significance because after breaking new extreme of the initial channel, market is not correcting, and there's a chance that even the secondary leg may get new extreme tested. We have uptrend working higher. We have actually a second entry short here. The downtrend needs to get new extreme. So this is a solid signal bar, solid high probability setup, second entry short. Downtrend needs to get new extreme. New is made, and now it's getting way too late. Market's about to close. So this is the overall structure for today. It was quite a decent downtrend. We started with slight bearish imbalance. We broke lower, so you understand how to identify the downtrend. Then you're looking for high probability setups, overshoot. This is why we had longer pullback, longer consolidation, another overshoot, generated spike down, and the new extreme was tested. So price action is perfect, but not that many opportunities. Only a few trades, long area without a setup here. So not that many trading opportunities, unfortunately. There are a couple more aggressive setups, of course, especially if you have better bars, but those are really clean setups, not as many of them. But I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.